There is so much important going on that I need to give you an update. Now, with geopolitics, as I've explained, it is a really difficult game to try and understand the probabilities and what you should do. The first thing to do when it comes to geopolitics is to do nothing, is to watch, absorb, and try and understand what the playing field is here, what the ramifications are. Now, I must admit, I didn't think that we'd get this far this fast in terms of Russia's actions within Ukraine. So I've been slightly back-footed, but I've already been expecting a global slowdown in the economy. And so I've been starting to position that way by buying bonds, some gold, some dollars, that kind of stuff. But let me talk about what I'm seeing now, how I'm thinking through this current event, and then some of the ramifications. Now, this is geopolitics. We have no real clue how this will play out. That's why it's so hard. Economic events are much more forecastable. Geopolitical events have many more different nuances, and you have to use that kind of decision tree structure to assess probabilities of all of the things that could happen and trying to figure out, okay, how do I protect myself? Can I make money out of this? What does this all mean for the much bigger picture? So there's a lot here. So let's dig in quickly to where we are now. There are, as ever, in geopolitical disputes, two sides of a story. And when you're trying to analyze geopolitics, you need to be aware of both. So then you can understand what is propaganda, who you're being told by what person for whatever reason. And in this situation, we know Russia's been very clear on its intentions to buffer its borders. Peter Zeihan's piece the other day made it very clear. I think D. Smith's gone through this, and most of the geopolitical strategists we've had on Real Vision have also looked at this. So Russia's been very keen on stopping NATO encroaching on its borders. NATO, on the other hand, is very keen on not letting Russia encroach on its borders, but it's been moving NATO's way. And this whole game has been played out for some period of time. I've written this up in GMI and written it up in Macro Insiders, or Real Vision Pro Macro, is this whole situation that we saw started with Chechnya, then moved to Crimea. This Ukraine story was the Crimea story. Then it's these splintering states. Then it's Ukraine itself. It's been a story that the Russians have had an obsession with in how they want to deal with it for their own sovereign protection. If Russia remains out of the global system, which looks increasingly likely, then we probably have a big liquidity problem. And that spits around the world in various ways, whether it's countries who are trying to get access to dollars, banks trying to get access to dollars, or whether it's credit spreads widening as people pull back, trying to assess the risks that are going on. And we don't really know. I mean, how does this affect Egypt? How does this affect the Middle East at large? How does it affect all sorts of countries? Again, we don't really know yet. But that's a hugely concerning moment, and that's a big global recession if that takes place, and a massive monumental geopolitical shift as the world really is forced to separate out. China starts separating out. And again, we'll come to a bit more of that in a sec. Scenario 3 is the worst case, which is, I think that Russia has made it clear that if you oversupply Poland with weaponry to give to Ukraine, then they're going to consider Poland as part of the war. This is Peter Zeihan's point about a potential invasion of Poland. I put that at a low probability, but what the hell do I know? If that is the case, then okay, this is now the worst case situation, because this is NATO versus Russia in a full war. I mean, I can't believe I'm saying these words, but that's where we are, and it's kind of shocking and terrifying. The issue I have with all of this, and I had underestimated it, is the knock-on effects are much larger than I first realized. That how things can spiral in very few decisions into something utterly terrifying that we've not had to face, certainly in our lifetimes, and certainly not in the West. Other regions have, obviously. I also find very concerning at a geopolitical level that we have frozen the assets of people that have not been tried in any sort of court. Now, it depends whether there's a confiscation going on here or freezing of assets. It depends on EU law and who's taking what. But it tells people that property ownership is not something that they perceive. If you own a property that's not in your jurisdiction, you don't own it. So I think that is, again, a shift that's going to take people's mindsets. Obviously, all of these trends are very bullish for Bitcoin particularly, but the crypto world overall over time. Now, crypto trades both as a risk asset and a store of value. The store of value element is becoming predominant right now and very clear. Risk aspect, well, it's a bloody risky world out there, so let's wait and see. I actually like bonds in this environment, because if you raise food and fuel and input costs, you're destroying demand. We've already seen demand slowing globally. We're already seeing a lot of forward-looking and playing out exactly as expected. The world is starting to slow down. The US is starting to slow down. Bond yields are starting to come off. And I think even with higher prices, I know everyone thinks it's inflation. I think it was a massive tightening of monetary conditions and total demand destruction on lower middle class households. So I think that is a big problem coming. And I think bonds should fall in yield. And right now, US bonds are a safe haven. So there's safe haven flows that come into that as well. I think generally speaking, bond yields should come down towards the 1% level. And let's see, are we building structural inflation by the changing of supply chains, or does that get solved by technology? Are factories that come from China using people that are moving to the US using robots inflationary or deflationary? Maybe it's inflationary first as you build them, and deflationary over time as the costs come down. As I said before, the digitization of anything tends to push costs down to zero over time. Bonds, I think, are a decent bet. Gold, for the reasons we've talked about, are a decent bet. Long term, I think it plays into what crypto is and means in this world. A distributed network that's not owned by anybody but owned by everybody is almost priceless in a situation like this.